Tina Tato Katoa. I'm Melissa Frick, one of the business trainee managers here at ANZ, and it's my great pleasure to welcome you along to getting your business off to a flying start. Just a few housekeeping that I will go through for this morning. So for today, we'll just go through the fine print. So our webinar is made with a range of experts for you, but it's for information purposes only. If you'd like to have some personalised advice for you or your business, please feel free to tick for an A to Z review where you'll sit down with one of our team to understand your personalised business and discuss that further. Today with me presenting will be Bruce Stormer, Director from Moore Markhams, helping you thrive in a changing world. We've got Tracy Wagner from Thank you, Bruce, from our Merchant Solutions, and she'll talk to you about getting paid. All right, thank you, Tracy. So thinking about those that do start a business, we often hear around those greatest challenges for those that are business. So around looking at that, there's a lot that you can see in this world chart here. Cash flow is a massive one. Cash is king. Really important to understand the flow of cash in and out of your business, just managing it. But what you can see here, I guess, from running a business, you have a lot of hats and a lot of jobs to keep on track of. But what's really important, and we'll talk through some tips and tricks today to help you plan and manage that so it doesn't feel like it's all getting on top of you. Our ANZ Startup Guide is a great guide to help you have a look at some tips and tricks. You can download this and get this from our website. If you just go onto our ANZ Biz Hub, you can jump on there and see this for yourself and grab a copy for you and to help you along with your business. But we'll talk about a few of the things that are in there and about how you can get help from the Startup Guide and some tips and tricks. As today's webinar, so how do you get off to a flying start? So some of you haven't actually made a start and some of you had. It's sort of 60-40 roughly. So many of you are going to have that idea. So it's thinking around that idea and is the business right for you? Is it that, is it going to fit with what, your life, your family, all of those sort of things? Validate the idea that you have. So sometimes, you might have this amazing idea and you start talking to people and potentially it's already been done or invented. You maybe do it better and have a point of difference. So not to say you can't, but just validating that. And that's as simple, as I said, as having those conversations with friends, family, or a trusted mentor. Thinking about the problem you solve. So when you think about, you go look for something out there, you're looking for your problem to be solved. So whether it's you want to sell a house, you need help with numbers, that's your accountant, or you need help with finance, it's a bank. They're all problems that you need solving. So thinking from a consumer's point of view, what problem do you solve for them? And then do you start from scratch or do you buy a franchise? And there's all pros and cons to each one of those, but it's considering those options. So with a franchise, obviously they're going to have it all set up with a basic business plan and structure to help you a long way, particularly if you haven't been in business before. And then once you've thought about you and your idea, then it's understanding your market. Who is your customer? Are they male? Are they female? Where are they located? What's their discretionary income? Are you a luxury item or are you a need like milk and bread? And then start to develop your business plan. So we have a webinar around doing your business plan, and there is stuff around that on our Biz Hub and the Startup Guide as well. And then very importantly in business is understanding your numbers and having a budget. So how much money do you need to start this business? Now, we often hear, a lot of people do start with nothing, but it is, you do need some sort of what we call working capital to maybe buy some equipment, maybe lease a premise, buy a vehicle, all those sort of things. Then you want to work out your cash flow, so understanding the flow of cash in and out of your business, how you can just pay your basic expenses. Have a plan B. So rainy days do happen, whether it's a natural disasters or COVID, those things can all impact your business as well as other things. So have a plan B. And importantly is have some sort of protection. 80% of our businesses are underinsured. So having some sort of protection that we will talk through later today around that for your talking to your Crombie Lockwood, your broker or someone about getting that protection. Then getting started, like having a go, just launching that. So well done to that 44%, and I'm sure the rest of you are going to have a go. Having a business structure. So Bruce will talk through business structures with you. So I'll leave that to Bruce to talk through that. Making sure tax and GST, you want to get set up from the get-go, right? And make sure it's all paid on time, money's aside, and it's just what you do. How customers will pay you. So Tracy will talk through about getting paid today. And again, I can't talk about protection enough, making sure you protect yourself and your customers within your business. And then launch. So, you've got this great idea, you've spent all this time, money getting things all set up, you've got a great business plan, all of that in place. But when you launch, you really want people to be aware of this amazing idea, this amazing problem that you solve, and promote yourself, and then measure. So don't just set things, you want to measure and celebrate success. It's really important in business to celebrate those milestones in your business. Next, what we will talk about is our raving fans funnel. So as we talked about within the launch, a lot of people will be unaware of your wonderful service and products, and they're unaware, they don't know what you're offering. So when you're new to business, this is where you really need to spend the time about getting people up, building your brand, building their knowledge of the problems that you solve and why people want to come to you rather than any competitors. Once you've built awareness around you and your business, then you want to start thinking about leads and developing who those leads are. So they're in your target market, and that's where it's important to do that research of your target market and where they are. But a lead is they haven't engaged. So how can you start to get them to engage with you? And that's when you think around prospects. So once engaging with you could be, you might have a blog, you could have a Facebook page, you could have a LinkedIn page, you might have a newsletter they've signed up to. That's them showing interest by following you or signing up to an email newsletter. They may have popped onto your website. So if you do have a website, it's good to have some sort of reporting of, how many clicks. Same as Facebook, that has it as well. If you have a business Facebook page, so make sure it is, but you can see the click-throughs and things like that. But that helps you with your business decisions and things like that, and build up where to spend your marketing. Now, it doesn't end once you've turned them from a prospect into a customer, so they've made a purchase with you. What do you do with them? How do you keep the information? Do you ring them and say happy birthday? Do you thank them for their business? Do you have an aftercare plan? So once you've made a purchase, good example of that, if you've gone and got your car serviced, do you contact the person and let them know when their Warrant of Fitness is due, or when their service is due again, so they come back and see you? Anything like that to keep them engaged with you and your product and service and brand. And last but not least, most importantly, I think, is raving fans. So this is someone that goes, you must go to ABC Limited because they're the best in town, and I think they're wonderful. Now, a raving fan does not have to necessarily be a customer, but they can be someone that's brought into your brand, your product and service, and really believes in it and tells others to go to you. What do you do with those raving fans to keep them being raving fans? Do you thank them for their referrals, because a thank you goes a long way? Or what is it that you do with them? Do you even know who your raving fans are? So have a think in the business. Where is best for you to sort of spend your time? It's hard to sort of do all the buckets all at the same time, but just be aware of all the stages and where you can sort of spend the time. For those of you looking to start, you're going to want to build your brand awareness. For those already in business, you may be looking at around those prospects, customer or aftercare range to help you grow and get off to a flying start. Kickstarting your digital business journey. So we're in a digital day and age, and it's really important to look at embracing the technology that you can in your business. A lot of these tools can help you be more efficient and spend time on, the things that you love and making more profit. So when you look at it, we've broken it down into 4 sections. So we've put it in everyday items, and this can be through HR management for those that have staff, your accounting. There's 2 major softwares out there, MYOB and Xero. These really help you to manage your numbers within a business and just keep it up to date. There's ways to store documents instead of the old shoebox, as Bruce might joke around some people's receipts. Point of sale, so making those sales, and risk and compliance. Then we have job management stuff, so doing quotes, product pricing, having your pricing right, managing projects, invoicing, and payments. So you want to get these things out fast so you get paid faster. So these are really important for you and your business. Online presence. So, I think, with COVID, we all saw the dramatic move to people buying even more online, switching businesses to online and from home. So having some sort of online presence is really important. Using social media and using them in the right place. So as we talked, where your target market is, have some sort of data to measure these things and help you make more informed decisions, and track and measure and change as you go with those. Lastly but not least, customer relationships. So a customer management tool. So this can help you store customer data, the sales that you've made with them. It could be as simple as birthdays, all the information that you do collect about your customer. CRM tools will help you. Leads generation, so whether you've got a calling program face-to-face or over the phone, or how you touch base with customers, these tools can help you manage that. Feedback is really valuable to your business, good and bad, because if you don't know, you can't make any changes. So it's great to get feedback from your customers, because it can help you as a business owner and a business grow and change. And a loyalty program, how can show those customers that you do value them for repeat business with you. Now, when you think about this in a digital way, there's these 4 areas that we've broken down. But what I would suggest for your business is think about what area where you can get the best efficiencies, and then look at those tools that can help you. So if you looked at an accounting tool, how it can help you, and then what benefit and time it can save you. The Digital Boost page, the government page, if you haven't checked it out there, have a look there, because there's a wealth of videos and information available for you to have a look around the tools for you and your business. But there's lots out there. Have a look what you need, and then work through, maybe try a demo first and see how that can work for you. Consider the time to implement and any training that you may require for you or your team to put those in place at the time. Now, as a business owner, and something my team and I are really passionate about, is starting with a growth mindset. So a growth mindset is really thinking, that you can do anything, looking at failure as a learn as you go through business. And I can tell you from my personal experience in businesses, you do need to learn from those failures, and they'll actually be the times when you look back the most and realize how much you grew from those times. So we talk about the growth mindsets from in your comfort zone. So a simple way to think about it is, you're sitting there listening to me, cross your arms, and then try and cross it the opposite way that you normally do, and do that 3 times. Now, I'm going to tell you, it's going to feel really awkward and weird, because you normally will always lead one way with the way you cross your arms. Now, it sounds a little bit silly, but we get used to our comfort zone. Same as you go to the supermarket, you probably park in the same car park or the same level every time, so you know where your car is. We get used to being in the comfort zone. It's just part of being human. But we want to get you, and many business owners are and live as entrepreneurs in the growth mindset. But, things like fear can get in their own. So it could be lack of self-confidence and just being frustrated. The fear, maybe if you're in full-time employment, to going out and being self-employed. That is a big step, and totally understand how that can feel. You've got your learning zone. So, this is when you start to sort of move into that growth zone. So you understand, what you can't control. You're aware of your emotions and that fear. And you're aware that you can control how you react and how your brain thinks. And I guess, as I like to say, retrain the brain. And that growth mindset and growth zone is, you just see how you can grow. You can see how you can take a change and learn from situations, you know, and then you help others as well. I think once you sort of get into this business, you know, I like to say co-petition rather than competition with businesses, and just sort of thank and appreciate. You use reflection and you take feedback and you adapt to change. So I think just, you know, having a go at it, and pat on the back for all of you that are thinking about doing a business and are starting it, because it is a big step and you've already shown part of your growth mindset in that. And just think when you do have those challenging days, that it is going to be a learn and a grow for you in your journey as a business owner. Great. So we're at the point I'd love to hand over to Bruce to take over and share how to start a business.
Okay, great. Thanks everyone. It's really good to be here, and I want to start by thanking ANZ for putting on the information they do, these webinars, and there's just a ton load of information in them that's really helpful. I want to start my presentation today by asking you this question. What do you think of when you think of accountants? What's a picture that comes to your mind? I wonder if this next slide reflects that picture of what you think. You think of a person in a back corner filled with spreadsheets, paper, that little cap on, crunching numbers. I'd like to suggest to you that you should think of your accountant more in these terms here in the next picture. And that is part of your team working with you alongside a lawyer, risk management specialist, your banker, all working together for your success. So my aim in today's presentation is to show you the value an accountant can bring to your team. So this is what I'm going to cover today. My top 3 tips: business structures, tax compliance, legal agreements, and business plans and forecasts. So I'm going to start with my top 3 tips. So let's bring up my top 3 tips, and they are this: cash is king, planning is essential, and systems are vital. As we go through the presentation today, I believe you'll see the reasons why these are my top 3 tips. So let's start off with business structures. When you're considering starting a business, one of the first questions will be, how do I structure myself? What's the best way? And there are a number of options, but I've got here 4 that are the 4 most common. And so you would work through each of these 4, and you would think about the following 4 considerations plus other things. I'd like to just take you through each type and consider these considerations. So a sole trader. A sole trader is somebody operating under their own name. Everything they do is them. So compliance cost-wise, it's simple. There's no setting up any new entities, anything like that. It's nice and simple from a compliance cost. But from a risk and protection point of view, it is you. Everything you do means that you're open to being pursued for some reason, and all your assets are exposed. From a perception point of view, a sole trader, it might have a lot of employees, but the perception is that it's just you. And so you need to consider, is that a perception you want for your business? It might be just you as you start off, but what's the long-term plan? What's the future? How are you going to sell that business, bring others into that business? So a sole trader might not be great for that. A partnership is really just any 2 or more entities working together. So those entities might be 3 people as sole traders working together under a partnership. It might be companies or trusts and partnership. The thing with the partnership is the compliance costs a little bit more, but there isn't any protection or risk with, there is risk, there's no protection, because you're still, whatever entity, if it's a sole trader and partnership, you're still exposed. Perception, partnerships can be good because you can be showing, hey, there's a group of people working together. Partnerships are easier for the future for partners coming in and out. But probably the most common one is a company structure. So a company is a separate legal entity. It's formed with the shareholders owning it and the directors running it. So there is more compliance costs. but it provides an element of protection depending on how you set up your business arrangements. There is protection from the risks of being in business a little bit more. Perception-wise, it can look, a company can give the perception that you are bigger than you are starting out, and in the future allows you to bring shareholders in, to transition to new owners, so it has more flexibility. There are a few people who will trade through trusts. They're called trading trusts. The compliance costs to set up are a lot more. They can offer great protection if they're set up right. And from a perception point of view, they're trading as a business. There's no big issues there. Future-wise, yes, it allows you to bring other family members in to run the business, for example. But in my experience, they're very few and far between because of the cost and compliance there. The key thing is this, is there is no right or wrong structure. It is what is most suitable for you. So make sure you apply your mind to, why am I being the structure I am, or want to be the structure I want to be, and will that be suitable not just now, but long term? Okay, so let's move from structures to compliance. Depending on what industry your business is in, you will have compliance of varying sorts, but one that will be common to all of you is tax. Now, I'll just go through these tax types. Income tax is the tax you pay on the profit you generate from your business, and the rate differs depending on how much you earn and what structure you're using. Ultimately, you want it to come back to you as an individual, so we'll have those multiple rates. If you're using a company, there's a flat rate, but when you pay a dividend out, you pay some more tax then. PAYE is the tax you deduct from wages and salaries you pay employees, and it's also, if you pay contractors, you may need to deduct withholding tax. So just be aware of that. It's paid at the same time with your PAYE. GST is the tax that's added to the value of your goods and services that you sell to your clients. And FBT, this stands for fringe benefit tax, and is designed to make tax neutral, whether you provide employees with a cash or a benefit. If you pay them cash, you have PAYE deducted. If you give a benefit, then you pay fringe benefit tax, and it makes it tax neutral. So if you're anything other than a sole trader, then that entity will need to have its own IRD number. If you're a sole trader, then your business income is declared on your personal IRD number on your personal tax return. GST, you only have to register for GST if your taxable supplies are going to exceed $60,000 in a 12-month period. However, I'd usually recommend registering from $1 of turnover, and I have two reasons for this. The first is that if you're registered for GST, you can then claim back GST on all your expenses. So you might have expenses before you start making sales, you can get the GST back on them. Second reason is that if you get to 60,000 turnover in a year and you then have to start charging your customers GST on top, then it's a 15% price increase for them. Or equally, if you have to take GST out of your price, you have reduced your revenue and therefore your profit by the amount of the GST you now have to pay. When you register for GST, there are a couple of things to consider. There's a basis for filing the return, and that's either a payment or an invoice basis. The benefit of being on a payments basis is you don't pay GST before you've received the GST from your customers. But an invoice basis might be better if you have big upfront purchases. You can get the GST straight away on invoice before you have to even pay the invoice. The filing periods, you have to decide whether you're going to file your GST return every 2 or 6 months. If you're good at paperwork, then saving the GST and filing every 6 months could be good for cash flow. But if you'd like to be forced to keep on top of your compliance, then 2 monthly would be a better option. Finally, if you pay employees or contractors, then you are required to do a payday report within 5 days of payment to IRD, and you can do this manually, but I would recommend using a payroll software provider, and they can then automatically file these reports as part of their software. So our next slide then, most often asked is, what can I claim? What can I claim pay that will reduce my tax? Now, there can never be an exhaustive list of things that are deductible. What might be deductible for you might not be for me, and I'll give you an example of that in a minute. So here's my simple explanation on how to determine if something is deductible. First, ask if you've incurred the expense in order to generate taxable income. An example, you place an ad and you boast it on social media. This ad is targeting possible customers or clients, and therefore it was incurred with the intention of gaining taxable income. Whether you got income or not does not matter. That was the intention, so it can be deducted from your income that you do receive. Second, you ask yourself if it was incurred it was incurred as part of running a business that is seeking to generate taxable income. Let me give you another example. Accounting fees don't generate income for you, but they are incurred in running a business that is seeking to gain taxable income. So if you can answer yes to either of these first two questions, then it is potentially a tax deductible expense. There are two further questions you need to ask, and that is, the first is whether it's an asset. So if it's an asset, then you can deduct it, but over time, and that's called depreciation. So if you buy a computer for $5,000, then you can't claim the $5,000 in year one, but you can claim 60% of it, and diminishing value over time, you can claim it as depreciation. If it's under $1,000 in an asset that doesn't make up part of a bigger asset, then you can claim it 100% in year one. The second question you ask is, did I receive a personal benefit from this expense? And if you did, then it's not deductible. So here's an example of that. I buy a suit to wear to work. Even though I purchase them for work, I don't wear them any other time than work. There is a personal benefit to me. It keeps me warm and modest. So it's not deductible to me. But this example is an example of a situation where the answer might be different in your business. For example, tradespeople buying protective clothing or specialist clothing that they don't use after work or can't use after work, that can be deducted as an expense. Now, because it can be very confusing with some items, is there personal benefit or not, then there are some specific rules around some things. The most common one is known as entertainment expenses rule. So in most cases, the IRD and just say it's 50-50, deductible 50%, not deductible 50%. So if you go out for a coffee with a client, it's business, you can say, yes, I was trying to gain taxable income. That's deductible, but I had a personal benefit, I got refreshment. So they say, let's just call it 50-50. Okay, the next slide then, we want to talk about tax payments. So one of the biggest areas where tax compliance trips new business owners up is in the payment dates for various taxes. I'm going to start from the bottom. Fringe benefit tax. That can be annually, quarterly, or monthly, but it's not usually a big issue, so it's not really one that people get tripped up with. PAYE is usually monthly or twice a month, depending on the size of your payroll. So it's happening as you're going, so it's not creating a big liability for you. GST, on the other hand, if you've registered for 6 months, then you could have 6 months worth of GST payments to pay after 6 months when they're due. And so again, you need to be saving the money as you go, otherwise it can get quite hard. But the one that really is a biggie is the income tax. And you'll see there I've got two terms, terminal tax and provisional tax. Okay, so each year a business prepares its return. And the amount of tax that is owed at the end is called the terminal tax. It's a final tax. It's known. This is what I earned last year. This is the tax on it. That's what I must pay. But because the government knows that cash is king for them as well as for you, they don't want to wait until after the end of the year to get their cash. So they also require a provisional tax payment, which is just a provision towards that terminal tax liability. It's not another tax, it's just paying it during the year. If at the end of the year you've paid too much provisional tax, then your terminal tax will actually be a refund. And if you owe them, then at least you've paid some of that terminal tax liability. The big issue with provisional tax and where people get tripped up is it is calculated based on the previous year's actual tax. And in the case of businesses starting out, that amount will be nil. I earned nothing last year, so I don't pay any provisional tax this year. So in year one, there's no income tax paid. But come to year two, and you have to pay tax for year one, the terminal tax, and a provision for year two, provisional tax based on year one. So this is a double whammy of tax. And if you haven't saved for tax from your when you go through, then your cash flow is going to be badly, badly affected. So save as you go. Now, to assist you in doing this, there is some software options available. So there's financial systems, and Mel has mentioned some of them, MYOB and Xero. There are payroll systems, and I've listed a few there. And there are other systems that can help you also make sure you're understanding where your profitability is, inventory systems, your stock help is part of calculating your profit. Your stock is there. You need to understand that and manage that for cash flow as well. I just want you to remember two things with software options. Software is fantastic, but garbage in, garbage out. So get it set up right so that you get the training, so you're putting the information in correctly and you're getting out good information. Secondly, there's little point in having a system well set up, but never looking at the data. So make sure you're properly trained, you're set up properly and trained on what it's telling you about your business. Okay, moving forward, let's talk about legal matters. And as all good lawyers and accountants will do, I must issue a disclaimer. So here it is. I'm not a lawyer, and this is not legal advice. But what I can tell you is what you should consider, having been working with clients for over 35 years. So you need to have agreed terms of trade, ones that fit your business, credit terms that fit your business and that you understand, and your clients understand what you expect from them. You must have written employment contracts. And I can't stress this enough. I've seen many clients and I've experienced it with kids who work for people who haven't got employment contracts. They are setting themselves up. You are setting yourselves up for a big problem potentially if you don't have written employment contracts. Make sure that the leases and the legal agreements that you have in place suit your business that you're starting up. You don't want to start up a business, have it be really successful and find that the lease ends and the landlord wants to take the premises back. And finally, and I can't stress this enough, you should have a good shareholder or a partnership agreement. You should think of, and this sounds bad, but you should think of the worst things that could happen, and then agree what you do in those situations. Because once it happens, it'll be too late to agree. It saves a lot of grief and a lot of arguments. So I'd really encourage you, if you're in business with somebody else, have a stakeholder agreement. Okay, now many of you may think that coming up with the idea for your business is the hard part. But I think the hardest and most important part is to develop your business plan and your budget. Now, as soon as I say that word budget, some of you will have imagined the picture on the left there. You'll have rolled your eyes and you might even have shut off. If that's you, please come back. A better image is the one on the right. We're all familiar with GPS maps now. We know that we set where we want to go. And if there are holdups, the map will redirect us. If things get in the way, there's roadblocks, it redirects, but we know where we're heading overall. And a business plan and a budget is simply about knowing where we want to head and looking ahead. People say, I can't do a budget because I don't know what's going to happen. That's true, but what would you like to happen? The next slide then, the business plans. I'll just skip over this because the ANZ has a really good webinar on this, but these are some things that I think you should be in a good business plan. And I would say it should be a really short, two-sided plan, not a big document that you put in the cabinet and never look at again. So when you're going into business, you need to think about your business model. So if we go to the next slide, and the first thing you need to understand is your revenue. What are the sources? Where are you going to generate your revenue from? What's the size and the opportunity that you see in the market? Will it be recurring? And if so, how often? Or once you've sold 10 products, is that the whole market saturated? You then need to think about your expenditure. What will it cost to generate the product? Great, you might be able to sell a product for $100, but if it costs you 120, there's no point proceeding. So these are called gross costs, and they vary depending on the on what you sell. But then there are overheads as well, and they're generally fixed. So you need to know what you need to pay, whether you open a door in your business or not. Things like insurance, rent, telephone. Finally, and most importantly, you need to know how much you need to live off. Why is that important? Let's look at the next slide. So, if you remember nothing else, please remember this. Turnover is vanity, profit is sanity, cash is king. Why am I so passionate about this? It's because there are two tests for insolvency. The first is that your assets are greater, your liability is greater than your assets. And the second is that you can't meet your debts as they fall due. So let me restate that. Some businesses have assets, but their liabilities are greater. Sorry, they have assets that are larger than their liabilities, but those assets are not cash. They might be a building, for example, and therefore they cannot pay their debts as they fall due and are therefore insolvent. So as I suggest cash is king, then we better understand where cash comes from in our business. So there are three ways, there are three things where profit comes from. Yes, so go to the next slide. It can either come from the profit the business generates, or from borrowing it from the bank, or getting business owners to invest. And in my view, business owners should treat their money in their business like the bank does. It's a borrowing, and I expect it to be repaid. So in reality, the only place you can get cash from is profit, because you're going to have to pay the others back. But profit doesn't always translate into cash. Why? Because businesses don't just pay their expenses out of cash, they also have to purchase assets, they have to purchase stock, they have to repay loans. So a business could be generating a good profit, but be cash poor. Remember before I said you need to know what you need to live out of a business. And that's important, because a business could be a good business making X profit, but if you need Y to live off, you're just going to drive that business cash poor and into insolvency. So understanding where your cash comes from and what cash you need is really important. And this is why a budget is so important, because it gives you something to be able to look at and see, will it meet what I need? It'll keep you sane. Businesses have cycles. There's seasonal. Sometimes you'll look at your financials, you'll look at the money in the bank and go, it's all doom and gloom. But the reality is that's your low point, and you might be doing better than you thought. Equally, you might look in the high season and say, my business is doing well, but the profit you're generating is not enough to cover you through the low point. So having a budget helps you know what you need to be able to cover through a whole year. Let's move on then to accountability. I talked before about having plans, but putting them in a filing cabinet and never looking at them. You can have all the goals, you can have all the action steps in the world, but if you're not checking in, then you're not going to know how you're going, and you're not going to be able to make changes at the time and at the pace that they need to be made to reach your goals. So accountability is really important. And this is where a good accountant can come in, because they can help you take the information you're getting from your accounting systems and your budgets and help you tell the story of what's happening in your business and what decisions need to be made when they need to be made so that you can have a successful and thriving business. To conclude, I hope I've given you some thought, some food for thought as you consider starting a business, and that you can see that an accountant should be a vital member of your business team. Great, and now I'm going to hand over to Tracy from ANZ Merchant Services, a really important topic, making sure you get paid. So thank you.
Fantastic. Thanks, Bruce. And hi, everyone. So as Bruce said, my name is Tracy Wainger, and I am a Merchant Engagement Manager with our Merchant Solutions team here at the ANZ. And what I'm going to talk to you about today is about getting paid for the sale of your goods and services. And whether you're on this webinar thinking about starting a business, or if you've set one up recently or have been in business for a while, I'm sure you'll all agree getting paid and having a good cash flow are both critical to its success. We can see that you like to make purchases in a number of different ways. And if you put your business owner hat on now, are you offering all of these options to your customers? And are you making it easy for them to buy your goods or services? Here's a fun fact, but a really important one. New Zealand consumers are one of the world's largest users per capita of cards for making purchases. Just have a think about this for a minute. Now you know this, could your business thrive or perhaps even survive without accepting card payments? I'd like to dive a bit more into what you need to be thinking about as a business owner when it comes to selling and getting paid for your goods or services, with a focus on card payments given their importance. First, you need to decide the following. Will you operate from a retail shop? Will you offer your goods or services online via a website? Do you take orders over the phone? Perhaps you operate remotely, such as from a mobile food truck or a coffee cart. Or you offer your goods or services via a mobile app, or perhaps it's a combination of these options. Once you have decided how you're going to offer your goods or services to your customers, you can turn your attention to how they're going to pay you. And when it comes to accepting card payments, there are 4 key things for you to consider. Number 1, what type of card payment solution will my business need? If you have a website and want to take orders and payments online, you'll need an online payment gateway. If you have a retail shop, it's likely you'll need an EFTPOS terminal. Or if your business moves about with you, a mobile EFTPOS terminal or a mobile payment solution like ANZ FastPay may be needed. Number 2, what type of cards will my business accept? You can choose from EFTPOS and debit cards only, or you can add credit cards and contactless acceptance. EFTPOS and debit cards, where the cardholder inserts or swipes the card, are processed for free. This excludes any terminal or network fees. Credit cards and contactless transactions are charged a merchant service fee. This is a percentage of the transaction amount and covers the bank's costs to process these types of transactions. While you pay to accept credit card transactions, they typically have a higher average transaction size than an EFTPOS or debit card transaction, so are an important consideration. With more consumers now preferring to use contactless cards and digital payments like Apple Pay and Google Pay on their mobile devices and watches, you also need to think about whether your business should accept contactless transactions. Let's just have another quick poll. What percentage of debit and credit card transactions on EFTPOS terminals now start with a tap, i.e. a contactless transaction? The answer is 90%, which might be surprising for some of you. It highlights a strong consumer preference for this option when it is available. So the third point we need to cover is you must think about your pricing strategy. If you accept credit cards and contactless transactions, you need to consider the cost, which is the merchant service fee I mentioned earlier, in your pricing strategy, along with the cost of your online payment gateway, your EFTPOS terminal, and any other costs associated with accepting cards. The merchant service fees are priced at an individual business level, and depending on the card turnover, may be one of the larger costs after wages and rent. It's therefore important to factor this cost into the sale price of your goods or services. Alternatively, you may want to add a surcharge for these types of transactions, and this is where you pass the cost of the merchant service fee directly onto your customers. This can be set up to be done automatically through your EFTPOS terminal or online payment gateway. And point number 4, you need to get your payment solution set up well before your business opens. Please don't leave it till the last minute. You should contact us at least 2 weeks before you open, and at least 4 weeks if you need an online payment gateway. Our specialist merchant team can help you with finding the right merchant solution for your business needs, and they'll advise you of how much it will cost. As you can see, there are a number of things to think about when it comes to getting paid by cards for the sale of your goods or services. If you take just one thing from today, it would be point 4. Get your payment solution set up well before your business opens. Please don't leave it to the last minute. And our friendly ANZ merchant team are here to help you whenever you're ready.
I'd also like to let you know we have recently launched to market our new ANZ FastPay mobile solution. FastPay Mobile is a standalone mobile payment device similar to an EFTPOS terminal, and it accepts all EFTPOS, Visa and MasterCard credit and debit cards, along with Union Pay cards and contactless transactions. FastPay Mobile is suitable for a wide range of businesses and now comes with the option for card not present transactions. The device is able to process payments using either the Vodafone 4G SIM or via Wi-Fi. If you're interested in this solution, please have a look at our website anz.co.nz/fastpay for more details and how to apply online.
Finished today, I just want to let you know about ANZ's free merchant intelligence reports. These reports help business owners understand how their business is tracking, providing valuable insights on card sales, customer demographics, and customer loyalty. In addition to our merchant intelligence report, we have published a merchant insights paper called Understanding Your Customers, How Your Transactional Data May Help Your Business Thrive. This is available on our website anz.co.nz/business under the Resources and Insights section. The Insights paper can assist you with understanding all of the data you will find in our Merchant Intelligence Report and how it might be helpful to you in your business. So, how do you get your hands on these fantastic reports as an ANZ merchant customer? You can obtain these for free from your business banking manager. Right, okay, so thanks for your time today, and please feel free to ask any questions you may have at the end. I'm going to pass you back to Mel now.
Thank you. So what we've got up on screen is the Digital Boost. So the Digital Boost is with the government, as we put in the link earlier. This is a really great way to learn about digital tools that are available to you in your business. There's a range of tools and videos and training, all to help you look at how you can implement these digital tools within your business and just help you be more efficient and use that technology to improve what you're doing. So have a look on there. We also have a team, we've teamed up with third parties to make it easier for you. So as been mentioned a couple of times, there is MYOB. This is an accounting software. So we have a partnership with them, so you can have a look at that if you don't have accounting software in place. Smartly is a great tool if you're going to have staff and need to do payroll. There's a lot of rules and legislation that you need to comply with, from KiwiSaver to annual leave, and the list goes on. So this is a great tool that just helps you to be compliant. We have a partnership with Toitū Carbon Assess, so basically helping you with looking at your carbon footprint, and sustainability is a big thing out there and could be your point of difference in business. And lastly but not least is Expensify, so helping you reconcile your expenses and just help keep it automated. Gone are the days of having it in a shoebox. It doesn't help you from end of year. So if I can ask everyone to just come back, all our presenters back on video, Tracy and Bruce, and we will go through any questions. So a question for Bruce. For a new business owner, what are the top 3 considerations when it comes to pricing strategy? Good question.
Yeah, really good question. So it's about knowing your market. I would say, what are your competitors doing, and what is the proposition, your unique selling proposition that makes your product different from theirs, so that you can differentiate when it comes to pricing. So I think the biggest thing is testing. And then the next thing is to say in pricing is then to work it through and say, okay, how much will it take me to produce this at this price? So it's if you go to market and you find, yeah, I can sell this product and I can sell it for $100, but you find you can only sell 1,000, and your cost to set up and manufacture, for example, or produce that service is way higher, then you can't afford to price it at what the market will pay. So you either find a way of selling it differently, or you change you pivot and say, this is not what I'm going to do going forward. So I think it's only 2, but I think they're the top 2. Yeah. What will the market pay, and can you produce, and at that price, will it produce a profit you need to run your business?
Great. Is MYOB like an accountant, or as a business owner, do I need both?
Definitely both. MYOB is a piece of software, and whatever you put in, you'll get reports out. But whether those reports are right or not, what they mean is where an accountant comes in. So yes, certainly the days of sending, when I first started work, clients sent their checkbooks, their bank statements, we coded, we processed everything, and then we gave them information. These days, MYOB and other products like it, they're great tools. But like any tool, it's interpretation of the information. What does it mean for my business? And that's where a good accountant comes in.
Great. And there's another one here. How best should I work with my accountant? I.e., just get my financials done, that's it? Or shall I spend some time with my CA analysis on my financial situation based on my goals? Before I give it to Bruce, I guess from a point of view I've seen over my 20 years in the bank and having a business, I think your accountant is not just about numbers. I think they're about being like a partner in your business, a support partner, and working together on reaching your goals. To me, they're not just a numbers person. And I'll give it to you, Bruce.
Yeah, thank you. I totally agree. Absolutely. I mean, you can use your accountant just for the numbers. What accountant can give you basically is peace of mind in terms of tax compliance, and that's doing your accounts and your tax return. But where the value comes on top of that peace of mind is, what do you want to achieve out of business? Who's going to hold you accountable? Who can talk you through the numbers and say, what's the story that it's telling you? What are the things you need to think about? And an accountant doesn't know your business and your industry as well as you. You have the answers, but what a good accountant will do will facilitate discussions with you that will give you clarity of what you're going to do and the next steps, so that you can be successful. Now, an accountant doing a set of accounts at the end of the year can't do that if they don't know what your goals are. Your goals might be around time freedom, not financial freedom. Yeah. So that's why you need to talk with them, say what you want, and then they can help you.
Thank you, Bruce. We'll do the last 2 questions. If you're asking for monthly payments, i.e. SaaS products, what would be a good way to collect payments regularly? Is this only by direct debit? And maybe if you can say what SaaS is for those that don't know.
It's a software as a service. So people pay you monthly for access to your software, etc. Just like the MYOBs and the Xeros and all of that do. And so yeah, having a direct credit where you're in control of taking the money out is definitely the best option.
Last question, do we need to engage a solicitor if we're dealing with lease agreements? Again, as Bruce pointed out, none of us here are legal experts, but I would, any sort of contract, get some advice around that from a legal perspective, because as Bruce said, you might just miss, there may be some key things in there. Also, it could be something, them getting you out of your lease, but what happens in the case of COVID or anything like those scenarios? Have you negotiated for things like that? So I would always get some legal documents checked. That's the last of our questions. At the end, I'd love to thank Tracy and Bruce. Thank you for being our guest speakers. And look, we'd love to see you at our next webinars. Ka pai te rā. Have a wonderful day. Thank you so much. We'll see you again. Bye-bye.